Good morning, everyone. Kamara is here, back with another weekly recap of my $2,000 Robinhood portfolio. And today, I have a little bit of news for you guys. This week was by far my worst week ever. It shouldn't have ever came to this, but it did. And you know what? If I thought that the two or three losses that I took on my second week were terrible, then this week was, yeah, it just set me back big time. But we've learned some things, and you know what? We've learned a lot more than we did from there. So to live and learn is all you really need. You feel me? So let's just talk about what happened here. So I had two trades this week that went wrong on me, and I will admit I was at fault. I wasn't doing my technical analysis correctly. I let my bias take a hold of me. I realize that now, and I don't know, it's just a strong manipulator whenever you're trying to make a decision. But effectively, my bias led me down here. It was on Meta and it was on NVIDIA. As you can see, this whole week, all I did was call credit spreads. So I was like low-key bearish on the entire market as a whole. And you might be seeing some new tickers here like Costco, Lamb, United Health, and that's also another mistake. I used my screener to find good stocks to diversify on, but what I found is to not diversify too much. On Monday, I entered all of these trades except this one. I was just, thirsty for some money back, which is also a bad thing. Do not revenge trade. And this wasn't more of revenge trading, it was just another position that I could use my capital in from a previously closed position. I can't remember which one it was. But Costco is something I won't be trading on ever again because it was really confusing. I'll talk about that later. But yeah, I was just bearish on the market like entirely, and I figured like the CPI data, like I know CPI data impacts the S&P a lot, but I didn't think it would impact individual stocks, and at least not the tech stocks like Tesla and Netflix. But I look, should have figured, they're all selling something for consumers, so it must have been impactful. And Costco of all, so literally a wholesale retailer, CPI data matters to them, and I didn't heed that because I thought, as long as I pick a good enough strike out of the money, then I'll be good. But it doesn't work that way, and I've come to learn that. So let's go to NVIDIA. Now, NVIDIA was great the whole week. Like, Theta Decay was tapping in, and I was making bank. And then all of a sudden, I think this was after CPI data. Yeah, what was that, Thursday? All of a sudden, the bull started picking it up again, and I had the 465 strike. And, I saw it come little by little. And eventually, what was it? It was overnight. On Thursday, it closed at like 461 or 3. And then the post market, it just started gapping up so high. I went in the money, and on Thursday I thought about selling the position for a $90 loss and just calling it a day, but I was like, I'm confident it wouldn't go to that, but it did. And overnight it gapped up, and then in the morning we had it go way in the money. And then in the morning I waited for it to like come down to here around like the 466 level, because I knew like after a big gap up like that, like the price must surely come down, and it did. But I just wanted to get out of the position. I didn't want to be in it anymore. And then eventually it dropped $10. So yeah, What can I say? I don't even know. That's not even biased. That's just me panicking a little. And can you blame me? Because I could, like, if I could have waited, and if it was the wrong decision, $500 gone. And that's like literally 13-14% of my portfolio. And then Meta. Dude, I should have been. See, this is another part where the bias really kicked in. I really do not like Facebook as a company. Um, I don't know. I guess I'm just a hater of Facebook along with everyone else. And I saw it climb like it's just been climbing straight up. And it was approaching this key level. No, it's not even a fucking key level, bro. I just saw it coming, and I was sure it wouldn't go any higher, especially after only one good earnings call. But throughout the week, it just kept going up and up and up and up, and I was just losing money, so I closed it a day early. And yeah, that didn't end well. And this was also the trade where I bought 2 contracts like a dumbass, so it was just double the loss. Thankfully, I hadn't doubled up into this. Oh my god! But those are my 2 worst trades. Yeah, just a lot to improve on the psychology part. And so Tesla and Netflix, these have been working well for me, but next week they have their earnings, and I think it's on Monday, right? July 19th? No, that's on Wednesday. Yeah, so I'm just not gonna trade these stocks at all next week because that's just a lot of volatility I don't like. But effectively, and since I was chasing a little high premium, I was going in like the 0.9 delta range. What was it? I've decided to write down my strategy, and I would love to show it. Actually, you know what? Yeah, who cares? So these are my criteria. Okay, so every time I enter a strike price, it has to meet these criteria, or else I'm just not entering it. And I'm doing my own fundamental analysis, and I've come up with my own rating charts, more like a bond one, just to simplify everything. And I'm gonna go fill this out after I'm done. But let's talk about some other trades I took. Tesla, yeah, it's just Tesla's been an absolute cash cow, and so is NVIDIA, bro. Adobe was the only one that entered a put credit spread on because they just been showing phenomenal growth. Let's talk about Lamb Research. So Lamb Research, I have yet to do my fundamentals on this company, and United Health just bounced back to 480, and I had the 495 strike. 492. Oh, okay. Oh, I'm glad it had its earnings. So Lamb Research was one that popped up on my screener, and let's go talk about the options on Lamb Research because they don't meet my criteria, and the stock is really volatile. Like, it was moving up and down between 608 and a high of 649 like this whole week. Yeah, whenever this week started, I don't know, or the last 2 weeks. So it's a pretty, it has, I don't know, like, I'm still learning, right? So the liquidity part is confusing. Like, it has a lot of liquidity where you could sell really far out of the money options with good delta, and you know, it has good volume and open interest. So I mean, I might look at just opening on this trade next week, but I'll make sure it's trend following. But the bid and the ask are so far apart, and on my first trade, I didn't want to be too selfish, so I just entered for a strike price of 15, and then, you know, 2 days later I entered another one, and this time, since I really wanted to recoup some losses, I went for a 37 strike and I got filled, and it worked out perfectly. But like, you know, I just haven't done my fundamentals. All I know, it's a research company, and you know, That's literally it. I don't even know anything else about it. So I was playing some risky games. United Health, that too. I know how these companies work, software as a service or something, but like these two, yeah, not sure. Is there another trade that I want to talk about? So yeah, these were all the lessons that I learned this week. Do not diversify too much. Trade with the trend, which was like, bro, I'm so stupid. Never chase high premium, which I did, and look at me, I got burned. I didn't even, actually, no, I didn't chase high premium. I did over here, but like, it's just so messy. Like, this is actually the hardest thing I've ever done in my life, bro. I swear to God. And size out little positions for good gains. What I mean like that is like, when you have a small net credit, it generally means you're taking on a lot of safety. So just, size up that same position. And yeah, the returns might be little, but you're making returns that, that's safe. So I am down all time. Kind of hurt to see that a little bit. Like, you could see my portfolio just rising from the ashes. It was like, bro, oh my God, it's just so I don't know what the hell you call it. But let's talk about Costco, dude. Costco like messed me up because the position was expiring and I got a notification from Costco and they just said, where was it? As part of our option sellout process, we've placed an order to buy to close one contract of the one that I sold, because I sold the 550. So they just bought the short leg. And I don't know what the hell the point was. It just left me with the naked buy leg with a -7, because I think that was the amount of money I spent to buy that contract in the spread order. And so then I tried to close it because I didn't know what the hell was gonna happen. And this was like 7 minutes before market close. So like, I'm just not trading on this ever again because this doesn't happen anywhere else. Yeah. But yeah, you can see everything that's expired. And another thing, this is just bad because it was 3.76%. It would be smaller if I didn't do the $1,000 deposit, but I'm so bearish on the market, dude. Like, I'm genuinely just waiting for a big sell-off so I can like transfer some of these funds to my IRA and buy up some actual stocks, because I just don't like buying stocks unless they're at a really cheap price. So yeah, do learn from me. Key takeaways: trade with the trend and hold no bias. Hold no bias. Do whatever you can to get rid of your bias. I'm so serious, it'll take you a long way. But yeah, action-packed week for sure. So I hope y'all take care, and I don't know, I'll see you guys all next time.